Whoa, what a day again on the markets and for AMC stock. Well, I'm going to share with you in this video another news that is totally at the opposite of what we're seeing the price action do. Okay? And that will give you another incentive, another confirmation on when I say that the price action, it's totally fake, and you already get what I mean by that. All right. So remember a couple of months ago, all right, when AMC was still flying around the $40 share, $40 to $50 share, in between this range, we had Credit Suisse that came in and said that, hey, we are shorting AMC because the price, we believe the fair price of the stock, the fair price of the company is at $1.55. All right. So guess now what Karma did to Credit Suisse. They are laying off New York employees as it shuts the hedge fund division. Yes, they're shutting down hedge fund division. So this is only in New York. They are laying off 69 people starting in March 6th. The pink slips are in a division that serve hedge funds, in which is being wound down after Archegos capital management collapsed last year. We talked about this numerous times on the channel, sticking the bank with a $5 billion loss. New management vowed to stop lending to hedge funds and processing their trades, a typically lucrative business dominated by Morgan Stanley, Goldman Sachs, and JP Morgan. The layoff will start March 6th, according to a filing with the New York Department of Labor. Now, folks, why is this important? First of all, because it confirms what we've been saying here for multiple weeks now, that most and a bunch of hedge funds are now closing doors or returning money to clients, or completely switching the short selling strategies and going long, meaning they are now buying stocks instead of just shorting those stocks, because it's not paying off. The strategy is not paying off. Bunch of hedge funds are just averaging 8%, where last year the whole S&P 500, if you just bought a ETF or a mutual fund tracking the S&P 500, it made 3 times that performance. All right. So it means that, hey, things are not right. Things are not getting according to the strategies of the hedge funds. The second thing it means is, what do you think is going to happen next to other hedge funds following the same situation here? I mean, first of all, Credit Suisse has lost last year $5 billion. That is a lot of money. It is no surprise to me that they are even closing this hedge fund division. So what about other big banks having hedge fund divisions? What about other hedge fund divisions that are now not only able to secure clients, to get new clients coming in, are preventing existing clients from removing their own money when the market, it's kind of, nobody knows exactly what the market is going to do in 2022, but we know that it's going to be bad for some of the pockets of the market in which hedge funds are heavily invested. I'm talking about the growth. I'm talking about the tech sector. All right. Now, ultimately, when you sum everything, it comes down to 3 things. Cheap money, I'm going to discuss in another video. Money is going to be cheap, so it's not going to be as easy to get banks to continue to lend you money as Credit Suisse was doing with other hedge funds. All right. Second of all, it's not paying off, so you are very stuck. Third of all, apes are not going anywhere. So what are you going to do? With interest rate increasing, where are you actually going to find the what we call the alpha? What are you going to find, that performance that are going to make you still be alive? Because they're actually looking at, I don't want to use the term bankruptcy because it's too soon, but it's near to that. All right. So just another news to give you, a sense of hope into holding onto this play, because if everything else crashes, then we know that AMC has the potential to actually raise to its own potential, finally hitting the moon.